Hi, so just making a quick video here about fixed rates versus variable rates. It's a pretty sexy topic at the moment. So a couple of things to look at. One is whether or not you should fix. Okay, now this is just general advice, everyone's different, okay? But the main things you want to look at is, so do you have anything coming up in the next while that you know is going to sort of limit your income, okay? If you're, say, someone's going to be off on maternity leave, you're planning to take time out from your job and travel or do whatever, then fixing in through that period can provide some certainty, allow you to put some money away and be really certain that you know exactly what your repayments are going to be and not get caught out. A bad reason, in my opinion, would be because you think you're going to save money. History says that usually variable rates will almost always work out cheaper than fixed rates over that period. Not always, but the odds are on that side. Okay, so don't get too caught up in that. Having said that, rates are still quite low. All right, now we're just coming out of a very low period historically in rates, and you can get some really cheap fixed rates, which to me says even if rates do happen to go down a bit again, and you're paying slightly over the odds, you're still paying a very cheap rate. Okay, so as far as an insurance policy goes or hedging, it's definitely worth having a look at now. Okay, everyone's different circumstances, so check it out. The other thing is, if you do decide to fix, how much do you want to fix? So very rarely will you want to fix the whole loan, because fixed rate loans generally don't have redraw, and generally you can't have an offset account linked to it, so they're not very flexible, right? So you'll want to have most of your loan fixed and a part variable. Now you should work that out by looking at how much money do you already have in redraw or in an offset account, so your variable has to be at least that much. On top of that, how much extra can you pay over that fixed rate period, whether it's 2 years, 3 years, 5 years, whatever you look at, okay? So, and then you make the variable portion that amount. So for example, I've got 20,000 in redraw at the moment, so I've got to have at least 20,000 variable. I think I can pay an extra 10 grand a year for the next 2 years, right? So I need at least 40,000 variable, so I've got the space to put that into. And you probably have to put a little bit on top of that, because you want to set yourself a challenge, and then your aim should be, over that fixed period, try to pay off the variable loan, okay? Really go hard at it, and set yourself a target, and then at the end of that time, when the fixed rate expires, then you reassess. Maybe split off another variable, maybe let it all go variable. You just work that out at the time. Okay, so hope that's been really helpful. Just remember, this is just general advice, okay? So everyone's different and has specific needs. If you want some specific advice, really happy to help anyone out and work through that decision around fixed and variable rates, because it's a really important one right now. Okay, so again, hope that helped. See you later. Bye.